I am a public relations consultant and I run PR Fusions, a public relations agency. What we do at PR Fusions is work with startup and growing brands to help them reach their communication goals and help them reach their business goals through communications. And so from my experience, I mean, my background is in working with startups. Basically, I've worked with quite a number of startups across fintech, agri-tech, transport tech, and some others. And I know that funding is very important, and it's important to any business now, whether the funding is bootstrapping or it is angel investment or whatever kind of funding it is, right? It's very important to every business, because I mean it's only when you have funds that you're able to move your business to even take your product to the market, first of all, and then from taking your product to the market, you can also scale and all of the other parts of the business growth that come with it. And so today we're going to be talking about funding for SMEs, and I will give all of our panelists the floor to just tell us a bit about themselves and then give us some insight into the topic funding for SMEs. And I'm very positive and hopeful that at the end of this call, everybody that is on this call would have something tangible, something or as many things as possible to take away from this call, because I can promise you that the people that we have as panelists on this session have the relevant and enough insights that can help you with getting the right funding, avoiding the pitfalls that you should avoid so that you can take your business to the next level. So thank you again. As the conversations go on, if you have any questions, please feel free to drop it in the chat. And when we get to the question and answer session, the questions will be attended to. Thank you once again. Mr. Ifeanyi, you have the floor now. I think you're speaking, but you're muted, so we can't hear anything you're saying.
Okay, thank you very much.
Thank you, sir.
Okay, so can you hear me well now?
Yes, you can.
Okay, so my name is Ifeanyi Ombo. I'm the Chief Executive of Asset Cap Investments Limited, popularly known as Lease House, we're a leasing company, a newly set up leasing company. We're 4 years old, and our business basically is asset finance, financial intermediary, and investments. I have a background in banking and asset finance, which cuts across over 2 decades. I've worked in various banks doing asset finance. I've worked in leasing companies, and I am a founder of Asset Cap Investment Limited. Thank you.
All right, thank you, sir. So we're expecting that you would just talk through funding for SMEs, but I think that we should just go around all the speakers and come back to you. So we'll just have each speaker talk about themselves and what they do in about 1 minute. Then we can come back to your perspective on funding for SMEs. Mr. Omori, you have the mic now.
Thank you, Linda. Good morning, everyone. My name is Omori Edogawere. I lead the team at Edogawere & Company, who are a tech-enabled law firm, full service, but with strong emphasis for startups and growing companies. The focus of the work we do is startup scale and build phenomenal products. Also, we would realize that the statistics say that within the first 3 years of existence, 80% of startups fail. one of the key objectives of our firm is helping startups scale without failing. Trying to get startups to rewrite the statistics of scaling the 3-year, 5-year mark and growing to become full-fledged companies that are not just leveraging heavily on technology, but also building phenomenal products and staying in business beyond, time that most of them fail. So essentially, that's what we do. We help startups.
Thank you very much for sharing that with us. We know that we have a ready law firm that we can run to so that our startups do not fail. So thank you, sir. Mr. Badero, you have the mic now. Mr. Badero, can you hear me, please? You're muted, so I don't know if you're speaking.
Oh, I was talking the whole time. I forgot to unmute. Thank you very much, Madam Moderator. Good morning, everyone. My name is Tunde Obadero, co-founder Zitra Investments, and at Zitra, we try to support SMEs to not only provide them with liquidity. We understand that cash flow is the lifeblood of any business. One of the reasons why the data that Mr. Murray provided earlier is a very serious problem is access to finance. We understand that for most SMEs, that's either debt or equity. And it's also interesting that a lot of these SMEs do not have access to traditional sources of funding. And it's not all of them that are tech heavy or tech savvy for that matter. And so there's a lot of need in the marketplace for alternative source of finance for SMEs. And it's not only in terms of providing them with access to funds, but also helping them manage their cash flow. Training, teaching them on how to manage their cash flow. That's what we do at Zitra. But quick background, I have 2 decades of experience in retail finance, worked in Polaris Bank, or now known as Polaris Bank, but then Sky Bank, Guarantee Trust Bank, and a bank called Metropolitan Bank. Done a bit of work with Page Financials, started with Page Financials at inception. I've also worked with Cardinal Stone Partners. Educational-wise, I've done a bit around first degree from Unilag, second degree from Lagos Business School, and a few courses here and there from INSEAD and so on. So I hope that the next hour or so allows us to enjoy in-depth conversation around how to support our most vital segment of the Nigerian economy, which are the SMEs. Thank you.
Thank you very much, sir. And I agree with you. SMEs are the most vital part of the Nigerian economy because SMEs what now have about 70-something% of businesses in Nigeria. So yes, they are essential to the lifeblood of the Nigerian economy. Thank you again for sharing that with us, Mr. Badero. Madam Bisola, you have the floor now.
All right, thank you so much for having me. It's a privilege to speak on this platform. So my name is Bisola Bello. I'm a sales manager at PayPal. Basically, what we do at PayPal is PayPal is building a business and banking for underserved SMEs in Africa. We started off in 2019, disbursing capital to SMEs in Africa. From inception to date, we've done about 30,000 loans to approximately 2,000 active customers on a monthly basis. So the idea here is to bridge the financial gap for SMEs, giving them opportunity to have easy access to working capital and the necessary fundings they need. Currently, we're expanding our businesses from credit to banking. What we are looking at is not to be able to not only give them access to credit, but also give them access to other banking futures that can position them in a space that they can have access to easy funding. That's basically what we do at People.
All right, thank you very much. So we know that if we want money, we can come to pay you. All right, thank you very much for sharing that with us. Mr. Larry Messon.
Hi, thank you so much for inviting me to join this session today, and I'm excited to be a part of the host of other speakers that are in this session as of today. And then it's nice to see you again, my colleague. So this is David Larry Messon. I'm basically a startup builder and a venture banker focused on helping startups build, raise, and as well as scale their startups across Africa and the world. I run a venture studio that's focused on building startups from scratch and getting investment for these startups. My background, I read mass comm and disruptive strategy from Harvard Business School, and I spent 16 years working within the startup ecosystem. So that'll be it for me.
All right, thank you very much, sir. And it's good to see you again. Mr. Messon runs First Founders, a venture studio. So, and I know that what First Founders does is help startups figure out their business so that you're not left hanging. So if you are actually at the point or at any point you feel stuck, First Founders is the place to run to. Thank you very much. Okay, so we'll just get right into the business for today. Funding for SMEs. So back to you, Mr. Ifeanyi.
Thank you very much.
So you have the floor now. Tell us about funding for SMEs from your perspective.
Okay, so I trust you can hear me very well now.
Yes, we can, but we can't see you. I don't know if that's intentional.
Yes, it is, because I'll be moving my phone.
Okay.
Yeah, but my video will come back up after this presentation.
All right, that's fine.
Okay, so funding for SMEs. I would like to start first of all by even identifying who SMEs are. And it says that these are small and medium-sized enterprises or businesses whose personnel and assets and revenues fall within certain limits and thresholds. For us in the finance world, whenever we go to the market to deal with clients, we always segment the clients into three parts. We segment them into personal clients, who are individuals, mostly working class individuals. Then we look at SMEs, and then we look at the corporates. So the SMEs are usually in between. They are very important people because while the individuals work in the corporates and some SMEs, the SMEs are those who service the corporates mostly. They are the in-between, that they go between in the economy, and they account for a very large number of companies in Nigeria today. I heard somebody mention over 70%. I did a research, and the research I did shows that SMEs account for up to 96% of businesses in Nigeria and 84% of employment in the country. And this information I got from PricewaterhouseCoopers. I guess this was probably 2022. So whether it's 70%, whether it's 96%, the story is they account for a lot of businesses in Nigeria. Hence, we have to ensure that SMEs grow and SMEs are supported for our economy to grow. They contribute up to 28% of our gross domestic product. So it is clear that SMEs are very, very important to the growth of our nation. In terms of funding directly, I would describe funding as the provision of capital. It is the money that is required for the business to run. And funding comes in two types. It's either equity or it is debt. Once you are trying to do business and you're looking for money, you are either looking for equity or you are looking for debt. Now, when it comes to equity, it is a funding given to exchange. It is a funding given in exchange for shares or ownership in a business. The reward for equity is dividends paid from future profits. So when you want to start a company, the first thing you look for is equity, and then you begin to look for those who are going to invest in the business. And of course, the promise to them is that they will earn dividends and future profits. And equity can come from different sources. Equity can come from personal savings. Equity can come from family and friends. Equity can come from angel investors, venture capitalists. You could also get equity from grants. You could get equity from crowdfunding, foundations, etc. When it comes to debt, debts are borrowings that are used to fund working capital. They are repaid to the lenders with interest. Debt can be obtained from family as well, can be obtained from banks in terms of term loans, trade finance, overdrafts, business credit cards, bonds, commercial papers, asset finance. You can also obtain debt from non-banks. And those non-bank financial institutions include leasing companies, finance houses, asset managers, vendors, and suppliers. So when I say vendors and suppliers, you can get supplier credit, you can get vendor credit as well. It's all part of debt to support your business. Now, for us, we say that the idea, experts recommend that SMEs should seek to commence business relying on equity. I've met quite a number of people who want to start businesses, and I asked them, so why haven't you started? And they said that is because nobody has borrowed them money. And I always ask, why do you want to borrow money to start a business? We recommend that you start with equity, no matter how small, but you need to start with equity. Debt can be introduced to the business afterwards. That way, the promoters of the business are likely to have a better or healthier funding mix. Oftentimes, starting a business with debt is discouraged as it poses high risk, threatening the survival of the business. So what we say here is it's important that you have, we say in our world, so you must have skin in the business. There must be people who believe in this business, people who say, look, I am going to put myself into this business, everything about me, and then they put their money, like you said, put your money where your mouth is. It could be the founder, it could be other investors the founder have brought together, but there must be money to start to run the business, which is your own capital, before you begin to think of debt. Because when you go straight for debt, and even if for some reason you are lucky and you're able to get debt, by the time you bring in the cost of setup, cost of purchase, cost of production, cost of marketing, before you sell, you would, and then you now begin to look at interest rates again from your borrower, timelines to pay back. Oftentimes, businesses fail because when money is borrowed to you based on certain structures, and you must ensure that you meet those structures and meet those timelines. Now, oftentimes when you start a new business, it doesn't flow that way. So if you are going to use borrowing and rely on the terms of borrowing to run a new business, you are likely to fail. Hence, we insist that there must be some form of equity in the business. And after you have run for a while, you now begin to seek for that. Now, how do you fund the business? Prospective and existing business owners seek to obtain funding either to start a business or to grow the business. Oftentimes, we are told that funding is a major challenge. As true as this may be, experience has shown that where certain tested procedures, governance, and standards are adhered to, funding can be obtained easier than assumed. Now, what I'm saying here is I have met people, and we have had this argument before now, and they say that they are unable to start their businesses, or they're able to run their businesses because they don't have money required funds, or they don't have enough funds, and all of that stuff. And I agree with them because as a student of economics, we were taught that your factors of production are land, labor, capital, and of course entrepreneurship, which is you. But from experience over the years, we have come to understand that while a lot of people sit back and wait for capital before their business grows, they themselves begin to draw that business back with that attitude. We have now understood that once all other variables are put in place, then you will begin to attract capital. So I tell people today that if I was to write the economics textbook, I will not put capital there as the most important factor to start a business. It is very important, but it is not the most important for you to be able to start or execute the business. If you put in every other thing you need to put in, capital will begin to chase you. So for me, for the steps to this is the first thing is the idea. Everything begins with your thoughts, which eventually forms your mindset. And then once you have your mindset, you have your thoughts of what you want to do, you've thought over them for so long, you've researched, you've gone out, you're sure that yes, this is what I want to do. The next thing to do is to have a business plan. Most SMEs today just start up and run. And people just say, oh, I have an idea, I want to open a restaurant, I want to open a barbering salon, whatever. And they just go ahead and they open and they just begin to run. And then they now hope to grow. But the truth of the matter is, if you really want to position yourself properly, one of the first things you need to do is do a business plan. And SMEs must be encouraged to understand that this is not just paperwork or following procedures. This is a major requirement in your business. Whether you are an existing business or you are a new business, you must come up with a business plan. And then what do you do here? Basically, what it says is that you write down the idea. In writing down the idea, you are stating what you want to do or what you are doing, the purpose for doing it, what you intend to achieve. It is from here that most companies generate their mission and vision statements, which must speak largely to their goals. So mission and vision statements are not just plaques that we hang on the wall. They actually state what you want to do and where you are going to. Research and highlight industry performance, how it has fared, the size of the industry, the players, and identify the opportunities. So I want to go into a particular industry, or I am in a particular industry. I am looking for money. What is the size of this industry? I need to state in my business plan. How is this industry faring vis-a-vis the environment? Who are the other players in this industry? And what are the opportunities that are there in this industry for me? You need to be able to put all of this in this document. You need to be able to describe the business, the various activities that will be carried out end to end, state the requirements, what you need, the space you need, personnel you need, equipment you need, working capital that you need, assign figures to them, include your sales projections and costs. That way, you will come up with financial projections for that business. Now, once you've included your financial projections, the projections will speak to your ability to generate revenues from the required capital, if given to you. It speaks to the amount of money to be made from the business. It is also advisable that an implementation plan with timelines end to end should be included. The business plan is then reduced into a smaller document called a teaser. Because what happens is when you have a business plan, usually you have a large document, and then you need to pass that document around to would-be investors. Oftentimes, these are people who do not have time to read 40, 50 page documents. So you have to reduce this document into a 2-pager or thereabout that talks about everything that we have mentioned. So there's like a summary document. Now, from experience, I found out that when you take the summary document alone to a would-be investor, what you hear behind the scene is, oh, that guy submitted a washy document. I don't think that document works. I mean, it's too scanty. Now, when you submit the full document, what you hear behind again is, who does this guy want to read all these things? So from experience, what we have found out is that you submit both documents. You submit your full-blown proposal and the summary, and then let your would-be investor go over the teaser, and then where he or she or the organization requires more information, they refer to the full-blown proposal. Now, if you share this document with potential investors, it is also advisable to work with tested financial consultants. They will not only support the preparation of this document, where you can't do this yourself, they can point you in the right direction for funding. There are a lot of people around the country who this is their work, this is their function. Their job is to help SMEs raise funding. An example is a number of agents of BOI that I know. These guys go about every day sourcing for small businesses that they can put together and take to BOI. And you have it all over. Internationally, you have the likes of Y Combinator and all of those people. These are investors looking for viable SMEs to put funds in. So if you can't do it directly, you need to be able to work with a number of consultants, some of whom are on this platform today, to point you in the right direction. In recent times, we have come to realize that with a proper business plan, adequate structures, and good corporate governance, SMEs are better positioned to attract funding, both locally and internationally. Of course, all of this is evident now in Nigeria. I mean, with the new companies we've been seeing, especially in the tech space. So that tells you that it's doable. Investors are seeking for good investment vehicles, and the business must seek to position itself as one to be able to attract funding from such investors. Regardless of status, a startup or an existing business, it is very important that you adhere to these. While equity investors want to seek the breakdown of how the SMEs can turn their funds around and return the same to them safely with profits, debt providers want to see that these companies have genuine cases, that the company has the technical know-how to do the business, that the company is in the market to sell, and that the company will generate enough income to pay back. Regardless of the structure, regardless of the documentation and the processes and all the tech stories and structures and write-ups in finance world, the game is strictly for debtors. If we give you funds, what are you going to use these funds for? Show me. Show me that this thing you are going to use these funds for, you know how to do it. Show me that there is a market for this thing where you will sell it. And show me how my money will come back to me. Once you are able to demonstrate this, debt will chase you. And I have lived in that world in my banking days where we go around chasing customers all over town to provide debt to them. So that tells you that as people are looking for funding, there are people who are running around town looking for who to give funding to. The story here is those who require funding need to position themselves properly to look attractive to those who want to give out money. And it is the positioning properly that we're trying to talk about now. Now, when we talk about funding structures, it is critical to understand your business requirements and the appropriate funding structures that apply from time to time. Equity levels must be determined to ensure that the business is well capitalized. For debt, depending on the type of business, particular loan structures may apply. Not all types of loans apply to all businesses. So I see people go around and they try to get loans from a bank, and when I speak to them, I tell them, okay, with what you're trying to do, you are not supposed to be looking for a term loan. What you need is an overdraft. And people apply for the wrong facilities and they are turned down. Others go to the wrong institutions. So I see an SME that is supposed to be looking for equity, who should be talking to a venture capital company, is writing letters to a bank, to banks, and is complaining that banks are turning them down. And I say, look, the banks are here to fund existing businesses that are already doing well, making profit, and they just want to scale. Banks are not to fund startups. If you are a startup, or go to the venture capitalist or look for an angel investor. So we find that a lot of SMEs do not really know where to go to, who to talk to, how to put themselves together to attract capital. Now, having said this, one of the other things I would say too is, what is the structure of your funding? So I sat with somebody one day and I gave the person an example, and the person told me that he wanted to start a restaurant, and he was looking for a particular amount of money. And I broke it down to him. I said, okay, so you are looking for this amount of money, and if you have all of this, you will start your restaurant. And he said, yes. And I said, okay, beautiful. Why don't we do this like this? If you have some money from savings, look for one or two other people who are willing to be partners, who you will share your business plan with, and show them that this business is profitable. And once they believe you, they bring in their funds, you would have raised half of the capital you're looking for. And the person agreed with me. And what I told the person was, why don't you use those funds and apply those funds to your space, to your land, to the outlets that you need. Pay for your outlets, buy a few items and move in there and begin to run skeletally. And this was done, and immediately afterwards, of course, other equipment requirements were there, working capital was required. And I said, now, beautiful, you have started and you are now banking. Your bank has seen your statement for a few months. So you can now talk to them for an overdraft. Do not go for a term loan or thereabout for the balance of the funds. You need equipment, you need cookers, you need generators, you need air conditioners, you need all those things. You can go the way of asset finance, and that is where leasing companies like us come in, where we do not give you a loan. We buy the assets that you require and deliver the assets to you to use, and you begin to pay instrumentally. You begin to make future repayments. So you have your assets, you are using your assets, and you are paying instrumentally. No collateral required. The assets we deliver to you are the assets those same assets are the security for the deal. So by the time we helped this client spread his funding, a bit of equity, a little overdraft, and then we did asset finance for the client, the business began to run and the business took off. So it means that SMEs can actually do well and attract funds, provided they are properly positioned and understand the funding structures to follow. Where they can't do it on their own, they should work with consultants who can help them. For me, takeaways from the conversation we've been having all morning is, number one, have a business plan. Number two, prepare budgets and projections periodically as required. Employ the services of financial experts. Have an accountant in-house or outsourced. A lot of SMEs today think, why am I having an accountant? What is he doing for me? He's not selling. That is one of the most important people in your organization. Those reports will steer you and show you what you are doing, show you where the positive areas you're going, where there are dangers, and you can address everything going forward. Prepare periodic financial reports. You cannot approach any investor to invest in your company if you want to expand your company, or approach any company or financier for debts where you do not have records to show. A lot of SMEs do not keep such records. And if you want to attract funding, one of the things people want to see is your financials. Do you have management accounts? Do you have audited accounts? Do you keep statement of affairs? All of these must be provided periodically to make the investor or the debt provider have a view of you and understand who you are, where you are going, and take an informed decision. The SMEs also need to follow standard HRO procedures. Now, a lot of people think that, oh, this is just left to big organizations. It's not true. So what we have done from experience is to, first of all, pick what is in our business plan. In our business plan, we have said that we will do X, Y, Z. And then we have stated the personnel that is required to do the X, Y, Z, and the amount of money required to do X, Y, Z. So what we have done is, after recruiting the personnel, we took the details of X, Y, Z from the business plan and broke them down into KRAs for the individuals. And the individuals signed up to those KRAs and ensure that, and with them, we begin to ensure that we have weekly meetings where we review performance against KRAs. And of course, you do this weekly, then monthly, then quarterly. So you follow through with the business plan down to the end. You should also follow, so yes, we've said this follows standard HR procedures. You could have this done for you in-house, or you could outsource this as well. Of course, we can't forget about technology. You must deploy technology, some form of technology, regardless of the size of your business. Technology would help you scale and make your business work easier. And then finally, ensure that you are fully banked. Oftentimes, we find SMEs come up to us, and when we analyze them, we turn some transactions down because we perceive that this customer does not have what it takes to repay. And then they begin to claim, no, my business is bigger than this. I said, but show me. And they are unable to show because they do not fully bank. And financiers rely on bank statements, rely on financial reports. So we encourage that SMEs should ensure that they are fully banked and that all their monies should go into the bank and they withdraw from the bank. Now, I believe that once SMEs position themselves this way, and this is not just a belief, this is an experience too, because having worked in the banks doing leasing, I've also worked in 2 startup leasing companies, and Asset Cap, where I am the CEO today, is the 3rd startup that I am doing. So it is understood and known and confirmed that once you follow this procedure, then funders begin to take you very seriously. So I'll stop here and thank you very much.
Thank you very much, Mr. Ifeanyi, for taking us through that. And that was actually really, really insightful. And I'm sure that everybody that is on this call has been able to take 1 or 2 or more things away from everything that you have said, because I was able to, I was taking notes throughout your presentation. Thank you very much, sir. We'll come back to you during the question and answer segment, but I'm going to now move to Mr. Tunde, and I'll give you the mic, but I want you to speak from a perspective of someone who has worked in both traditional banking and fintech. From your experience, can you speak to some of the different approaches that startups and businesses, SMEs generally, take to getting finance from these places? And of course, what are the benefits and disadvantages of some of these approaches?
Okay. Thank you very much, Madam Moderator. How much time do we have?
We don't have so much time, so I will give you just 5 minutes to go through that.
Mr. Ifeanyi may have swallowed up all the time that we had.
Yeah.
So I'll make it quick. 5 minutes is enough, I guess. For startups.
I apologize for that.
For startups, apologies accepted. For startups, we must be mindful of the fact that startups are at different stages in their life cycle. Last time I checked, Amazon is still referred to as a startup, or was still referred to as a startup. So that startup thing is a large umbrella that captures a whole lot. But in our context, in our local context, we must make some necessary distinctions because it helps us all that way. Now, how do I mean? I think Mr. Efai told us earlier about how 90% plus of the businesses in Nigeria are SMEs. Now, if we have that in our minds, we must be aware that most of these SMEs are not tech-enabled businesses or the classic startup concepts-based businesses. They are your mom and pop shops. They are the hair salon. They are the guy who makes the guy or the lady who makes meals, maybe 1,000, maybe 200, 100 or even less meals a day. So that's what our traditional business models look like. And what keeping that in mind does for us, whether you are a traditional fund provider or a VC, but of course VCs will not be interested in this segment of the market, clearly so. But what that does for us is that it allows us to have an inkling into the market, into what the market, how the market provider or the value provider is thinking. Now, but to go straight to your question, I would like to point out a few things that most SMEs need to find or sort out quickly in their fund before they embark on the funding journey in the first instance. The first thing is to clearly know what their PMF is, product market fit is. So it's not sufficient that you have an idea. It's important that you know exactly how your idea, your product fits in the market. And what do I mean by this? Will customers buy my product? Are they using, assuming that it's already in marketplace, are they using my product? Are they telling other people about my product? Are they doing all of this in numbers large enough for it to make business sense? And by business sense, I'm saying, will I grow? Can I scale? Will I be profitable? Am I going to be able to sell it at a price that will be profitable? So those questions are key. Now, if you're in a market where you're not the first entrant, you're not the first person in the market, those things may have been answered for you already by the early players. So basically what you're doing is tweaking the product a little bit or adding new features or doing one thing or the other that makes your product have a new USP. But if what you're doing is new, absolutely new in the market, then of course it is important that you figure out these things. In 2 minutes, I'll round off with just 3 more things. It's also important for us not to walk alone. SMEs need to realize that you can't walk alone. Now, what does not walking alone mean? Not walking alone in my context is saying, look, you do not have to be a sole founder. There's nothing wrong with owning 30% or 40 or even 10. Bring in other people who have other competencies that are different from yours. Now, what that does is that it adds a lot more depth to what you're building. It helps you to be able to add other input into what you're building because you can have other ideas that are different from yours. Preferably add these people who have strength in areas where you lack. And what that does is, like I said, it deepens your knowledge pool. But importantly, it also deepens your networking pool. Because you guys will not may not necessarily come from the same background, have the same friends, have the same professional network. What having other people on board does is it allows you or the company or the business to enjoy a broader, wider network. It's also important to look for support groups or supporting communities, supporting SME communities that can help you to be able to optimize for funding. Now, when I say optimize for funding, I think Mr. Ife, did a good job explaining to us what sources of capital will look like, or sources of funding will look like. He described debt and equity, and he did a good job to expatiate how those sources are. But for most startups, at the beginning of your journey, your most critical source of fund is family and friends, your network. And that's why the last point I made about not working alone becomes very critical. Now, once you have scaled this phase, I think I've used up my time, so give me just 30 seconds to round up. Once you have scaled this phase and you have started to have cash flow, to basically have sales, to basically have a business that has revenue, no matter how small the revenue is, it's critical that you have a proper record-keeping process. And it does not have to be the most tech-heavy one. It can be basic Excel. That's what all of your tech record-keeping devices or software is based on anyway. So, just keep a record of all of your inflows and your outflows. It will be important because you now have cash flow and you're knocking on doors for other sources of funds other than equity. You may need those to be able to engage providers of debt, like Zitra Investments. So it's important that your record keeping will also be useful for equity providers. Just the other day, we invested in a mobility company outside Nigeria, and it was a seed fund. But one of the things we needed to see was what their plans were. So from the startup point of view, the guy who hasn't started as well needs to have a clear plan. People call it a business plan, but depending on your competence, your background, and your knowledge, your business plan may differ. Some people's business plans will be 500 pages, but some other companies' business plan may be 10 pages. It's not about the size, it's the understanding of the business you bring to bear in the document, the clarity that your document carries. My time is up, and I will round off by saying, regardless of what SME or business you run or intend to run, your ability to stick to it, to stick to the grind, our colleagues stick to its ability, your ability to just continue to stay there, even when the day may be dark, is important, because of course it goes without saying that it's not an easy venture. But on the other side of that is that you must look for, if that's what you're doing with your life, then you must find ways to enjoy it. You must find ways to make it as interesting for you as possible. And some people say that you must do the things you enjoy. I think that if one is going to wait till he finds what he enjoys doing, he might wait. Some people may wait the whole of their lives. But whatever it is you're doing, you must find fun in it, and make it worth your while. Thank you. Thank you, everyone.
Thank you very much for sharing that with us, and that thought that you closed with about looking for what you do. I mean, we all want to do what we're passionate about, but like you said, if we wait to find what we're passionate about, then we may end up waiting forever. And why wait forever when you can just get started on something and enjoy it while you're at it? So thank you very much for sharing that with us, Mr. Tunde. I'm now going to come to you, Ms. Bisola. Can you hear me?
Yes, I can hear you.
Okay. So I am coming to you from your role as the sales manager for PayHipo, and I think that a lot of businesses are looking for funding when they are not even ready for funding, or when they don't particularly need funding. And I mean, I have seen it play out in some places, and I have also experienced people that have said, I don't think I need funding yet. So from your perspective, and I mean, with what you do at PayHipo, can you give us some examples of industries or sectors in Nigeria where SMEs need money the most, and then why do they need money? Why do you think that they need money? And I'm asking this because I know that you worked with quite a number of SMEs through your platform at PayHippo.
Okay, thank you so much for the question. So basically, with what I do at PayPal, our products is mainly working capital. So from my experience with working with SMEs, I noticed most sectors that need working capital are mostly the manufacturing industry, like in the retail space, people that buy and sell. And most of the time, these entities are rather in smaller scale businesses. They don't have the capacity to actually fund their businesses themselves, hence they seek funding from financial sectors. So basically, what I usually see that they need funding for mostly is just for their operating business, their day-to-day transaction. Most small scale business or retailers actually don't need that large fund or don't have the luxury of funds to actually maybe tie down their business or something. But what they usually need is just a short-term fund, which I call working capital, for them to meet their urgent needs, their short-term needs. That's what I know for the retail space. Then another sector that I usually work with, which I've worked with in the past, that usually need fundings, maybe the mobile money operators. Because of this type of their businesses, they usually need short-term funding just to run their businesses for a short time, most times 30 days, 60 days, 90 days. They, you know what mobile money is, mobile money operators, like people that do all these POS services, banking services in the rural area or in the small scale. They're also known as smaller banks, so to say. So for those kind of businesses, you don't really require too much capital. You don't really require too much of financial processes or documentation. The basic thing is just for you to understand what the business is and how to
Okay, thank you very much, Ms. Bisola, for taking us through that. So we know.
Sorry, my network. Can you? Okay.
Okay, yes, you can go ahead.
Okay. So such businesses just need something smaller, something small in terms of value and something short just to meet their day-to-day expenses. But usually my question to every small scale businesses, do you actually need funding? Haven't met up every criteria of the need for funding, then I also like to speak to SMEs about how they can actually position themselves to actually get the right fundings they need. This would be the health of their business. Are they keeping a proper financial record? Do they actually know the difference between revenue and income? Because a lot of these small scale businesses actually feel every income they get in their business is revenue. So being able to differentiate between revenue and income is also very important. Then some of these small scale businesses actually feel they can be overfunded. Like we at PayPal, what we do is we have like AI that determines what a specific SME can get. And most of the time I get feedback on companies that, oh yeah, I'm not getting enough funding. But because of this AI and how our technology is built, based on the health of the business, we can actually determine how much an SME can get and how much and the capacity for them to repay, which is as important as actually getting the funding, the health of their business, the capacity for them to repay. And also if they are putting their financials in record, because I know every financial house, we want to check the health of a business to know if they can fund to them or not. This is my take. Thank you.
Thank you very much. And I agree with you. Not everybody needs funding, but it's good that you have helped us clarify some of these things so that if anybody's asking for funding, they know exactly why they need it and they can also be certain that they are going to be able to use it to improve on their business. So thank you again for taking us through that. Mr. Messon, are you here?
I'm very much here.
Great. So I'm coming to you from your perspective as a venture studio founder. You have raised over $10 million for startups in the African markets. Could you share some insight into the fundraising process for SMEs in Nigeria and any challenges that you have also encountered along the way?
All right, thank you very much, Blessing. When it comes to fundraising in itself, I mean, first of all, I must give kudos to, the last three speakers that have really touched on very critical endpoints with regards to SME funding and all of that. They really covered a lot. Okay, so talking about processes to, getting funding in itself, or that investor readiness, it's important for SMEs to know that first things first, they have to be able to maintain a very strong understanding of their revenue structure. For me, when you come to me, you want to raise money, I want to first even understand what your revenue structure looks like, because without that revenue structure, that pipeline to ensuring that there's a continuous flow of revenue from that business, or even there's a stronger prediction to how your revenue will emerge, then what's the point of trying to raise funds? Because you can't be raising money from a product perspective. You have to be raising money from the perspective of that revenue, knowing fully well that you have a product that is in demand, that people want, but you just want to be able to scale that product, and that there is demand for it. That demand is very important, and you have justified it either through statistics or either through what we call a validated market, or you already have like a proven thesis to that you have X number of people that are already buying what you are buying. That's a repeat sales to what you are doing. And as such, you want to just scale or increase the process of producing that product, or you want to increase the number of that product to be able to meet up with an existing demand that is already in the market. That should even be the basis for which you should even be talking about money. And for me, I also believe that, from my experience, and also looking at the failure rate of a lot of SMEs that sort of dabble into going to get money straight up, I realized that a lot of SMEs do not focus first on their customers, knowing exactly what their customers want, and seeing their customers as their number one source of revenue. And when you see your customers as number one source of revenue, you are even going to get money from the customer even before you get a product to them, because already they know that you can solve their problem for them. You have a solution to their problem. They will pay you to be able to get that revenue. So I would say that the first process is to establish a strong revenue system, to be sure to understand the pipeline to which your revenue will come in, so that when you now go to meet an investor, or even go to meet a financing agency and say, hey, come, see, look at how we'll be making money, and look at what we have done in the last 1 to 6 months, but we just need money to just scale this or increase the pipeline, of what we're trying to do. The debt financing person will give you the money because they already could see clearly that, hey, you have established a revenue structure, and as such, why shouldn't they? That they can actually guarantee that they can get their money back from you. Because for whether an equity investor, a debt financing company, or a debt financier, what they are most interested in is, how can our money come back? When we give you the money, how can it come back? And not just only come back as the money we have given to you, but it should come back as money given to you plus more. That's the expectations of the whole idea of investment. So as an entrepreneur, as an SME leader, first things first is sit down and ask yourself, if I'm given money right now, what am I going to put that money into? You get? And that alone in itself sort of prepares you for the journey of investment readiness, and most importantly, being attractive for investors to kind of sort of put money into you. But in a very chronological order, you need to, have a pitch deck, that sort of, analyzes the whole essence of your business, which is a summary document of the problem you are solving, the solution that you have, the strategy to which you are going to deliver that, having an established sense of how the market sort of operates, who are your competitors, and also breaking down how much you need to be able to, get that product out, or to sort of scale that product. And then also having a deep sense of how you are going to make revenue and how you're going to scale that, just to be able to give investors an idea of how that will work. And then in terms of debt, realistically in Nigeria today, for you to be able to get loan or debt from anyone, there are certain instruments that you need to be able to, get that funding. Take, for example, the new generation fintech platforms that are giving loan to business owners and all of that. They've come up with a metric where you either drop your vehicle or, with a tracker on it for you to be able to access a certain type of loan, apart from other metrics such as, submitting, filling your information about some relevant things, inclusive of some assets that you have. But what is most important is that I think that space is beginning to be more flexible with giving money. But the question is, how many SME people, CEOs have that vehicle to even give, or can even afford to pay for the tracker that they are going to place in that vehicle? You understand? So that's another thing to sort of look at. So I still feel that that's the system, as fragmented as it is still a bit disenfranchised. But then with time, we will definitely sort of evolve into, making SMEs have more access to funding. But it's a two-way thing. So we should not only look at it from, we don't have people giving us funding. But the other question is, are you ready? Are you preparing yourself to even return people's money when you get the money? Or you just want to put the money into your product and then you lose the money? You can even lose the money genuinely. You understand? What I mean by losing the money genuinely is you don't know how to return the money. There's no revenue structure to what you're doing. And then you actually go and get the loan. Maybe for some qualification reasons, you get the money. And then you put the money into the wrong things in the business. You see people get loan, and instead of them to put the money in the most important things in their business, they go rent an office, they go just buy all manner of things. And then the next thing, the engine room, the lifeblood of the business is suffering, to sort of survive. So I think that SMEs should begin to really think about, when you get money, put the money in what will bring money, not what will make money sit down. It's important for you to focus the money on producing what will ensure that you make that money back in full to be able to return, because your returning ability is what will determine if you will get more, and also make the room, comfortable or more conducive for other people that are coming behind you to be able to get funding. Sometimes you see some financing agencies say they can't give money to an SME. That's because from their risk experience, they see that those SMEs are high risk and they don't want to just give money to this, to these guys and all of that. So those are just things that I would just like to touch on, as everybody has said a lot around, process and all of those things. So I would just say that focus more on your revenue structure, ensure that you manage your risk factor on your own side, so not be too risky for those who are going to finance you, and try as much as possible to, to develop processes that allow you to understand the markets that you are focusing on and what exactly they need, and that will create that repeat process when it comes to, you generating revenue. And don't forget, business is about revenue and revenue and revenue. When you are able to establish that, and sometimes you just need to think through it, when you're able to establish that very strongly, there's no way you won't get funding, either from an equity investor or a debt financing person. That'll be it from my own end. Thanks.
Thank you very much, sir. Thank you for sharing that insight with us. And I mean, I'll come back to you on some of the points that you have raised, so that we can all take lessons from there as well. Thank you. Mr. Mori, can you hear me?
Yes, I can.
Okay. All right. So I will ask you, from your perspective as a legal practitioner, in your experience, what are some of the common legal issues that arise with SMEs raising funding? And I mean, in the whole cost of the funding transactions, what are some of the issues?
Well, thank you for the question, and I must commend Business Day for this forum, and kudos to the other speakers who have spoken before me. But just to put a bit of things in context, the way the conversation has even gone, with utmost respect to the speakers who have spoken before me, is partly why the startup ecosystem is having the problem it's facing. And that is because we tend to put the cart before the horse. And the first thing every business must get right is structure. Many startups do not even understand the system they play in, do not even understand the need for a structure, and do not even understand how to adequately prepare themselves for the world of business they want to go into. But I like to correct something. And the first thing is there is a distinction between MSMEs and startups. Startups may be MSMEs, but not all MSMEs are startups, right? A startup is essentially defined as a business or a company that leverages on innovation, that promotes innovation, leveraging on technology. So any business that is not technology-based cannot qualify as a startup, right? Now, today in Nigeria, we have what we call the Nigerian Startup Act, which is a primary legislation that enables startups in Nigeria. And that act defines a startup as a company within the ages of 0 to 10 years that is in the business of a technology development, scientific or innovation-based product or service, right? So we have a legal definition for startups. MSMEs, on the other hand, include startups and also non-tech-based businesses, even though there's an argument outside that says, really, is there really any business that does not leverage on technology to provide the services they provide? Because technology, is like a moving train. It will take you whether you like it or not. However, there are still MSMEs that we can categorize as analog, right? So I wouldn't want this conversation to be skewed heavily to startups alone without clearly, understanding the entire gamut. And to cater for those MSMEs is why you have what you call the SMEDAN Act, right? The Small and Medium Scale Enterprises Development, Agency of Nigeria, SMEDAN, that provides support, pocket loans, and assistance for, small, medium-scale businesses. Why the Startup Act is primarily focused on enabling startups and helping them grow. Now, the biggest problem that businesses face, and I'm going to use businesses as against startups, right? The biggest problem businesses face isn't necessarily funding, but it's creating the adequate structure and putting in place a corporate governance framework for the company. Now, if you do a survey to ask why many businesses have failed, yes, funding is a key factor. But if you check very well, a lot of it also borders on the wrong structure, borders on mismanagement, which is also a failure of corporate governance, borders on inability to create adequate market presence. Now, one advice I always give my startup clients is I say to them, look, focus more on marketing your product and raising revenue from marketing your product than getting finance to scale your product. Because there's something, you see, there's something finance does. It makes you lazy. Now, when you look at the average traditional business person in the Alabas or in the trade fairs or in the Lagos Island, who started in one small shop, selling maybe 10 items, and then scaling to grow to big outlets, and all that. And when you ask them, they didn't set out looking for loans or looking for venture capitalists or angel investors and all that. They did what we call today bootstrapping. And that is your biggest asset as a business person as you start. You don't start a business expecting people to fund you. Because here's the problem. When you get funding from third parties, especially VCs, you're more or less restricting your flow of creativity and growth. Because VCs, people who fund you, for instance, they don't play around with money. They haven't got the money to waste. So he who plays the piper oftentimes dictates the tune. And so this hampers your creativity. And you find that many times when businesses or startups develop very innovative products, they focus more on looking for funding as against marketing the product to get that market acceptance that brings in money. So they bootstrap only at the ideation, and then push a bit and all that. But you see, where you are able to market adequately, one thing that attracts funding is acceptability. When the VCs know, for instance, that, look, this product is out there, there's a market for it, and there are people who are, going all the way out, they'll even approach you for funding. But from a legal standpoint, there are 4 key factors that startups must have at the back of their mind, and businesses, now making it a lot wider, must have at the back of your mind if you want to access finance. The first is your structure. What's your corporate governance structure? What's your legal structure? I'm not saying this because I'm a lawyer, but I watched, for instance, a Lion's Den presentation where someone came before, VCs and for funding, and had this fantastic product that wasn't registered, had a brand that wasn't trademarked. So what equity really do you want to give to people who you want to give funding? Oftentimes also, you have business owners who register their entities just for the purpose of fulfilling requirements, as against being intentional about ensuring that they have the best fit. I always say, for instance, any startup that's looking for funding, right? And you come with a business name, you're not ready for business. You're joking. Because business names don't even confer any legal personality. They don't confer any legal protection. All they give you is priority of use of name. So it's not a legal entity. And so these are some of the issues that affect you on the long run, because you're starting on the wrong footing without adequately understanding your structure. So many entrepreneurs understand their product, build phenomenal products, but do not understand what we call the business of running your business. They don't understand structure. They don't understand how to manage their internal arrangements. Another big issue that affects, the ability of startups and businesses to grow is the inability to have adequate understanding among founders. There are no proper agreements in place that, what we call founders agreement, or what we may call shareholders agreements, these documents that help, business co-founders relate in a way that doesn't stifle the business. So before you look at funding, there's an adage that says you must be fine at home before going outside. Before looking at funding, the question should be, how much have you even done to prepare yourself internally? I often say to businesses, startups, entrepreneurs that are in the brand business, or that have a product or service that they are delivering, your most important asset is your brand. Legal registration, for instance, does not even give your brand protection. What gives your brand protection is intellectual property protection. And so you're marketing a beautiful brand, or we have this solution, or this payment solution, or this HR solution, or this that is not even protected. Does not even have intellectual property protection. How do you intend to get funding? How do you intend to even be seen as a serious-minded business when the main thing you are brandishing is free falling? It will surprise you, or I'm sure many of us will know, that, for instance, Apple's intellectual property portfolio is worth $976 billion. And this was as of 2021. We haven't gotten the ratings for 2022. And I'm sure it would have gone a lot more. And this tells you how important intellectual property is. Because really, as a budding business, as a startup, you really do not have any collateral, so to speak. Your only collateral is the brand, the product. And if you can't protect the product, you will have issues with ensuring that people who want to fund you feel at ease to fund you. And then, I heard about business plans and all that. Really, what's important is having not just an understanding of your product, but an understanding of the environment. I listen to many startups, and I even pitch to me. And they pitch as if I live in New York. They pitch as if, it's good to understand advancements and growth, but it's equally even more important to understand the contemporary environment where you operate and what the needs of that environment are and how you are bridging that gap using relatable, understandable technology. That's what builds growth. If you look, for instance, at some of the big startups in Nigeria today that have become unicorns, they preyed on a key thing, the gap, the existing gap, leveraging on best technology, filled that gap, but using relatable and understandable systems in place. Working even with the traditional financial institutions, they've been able to scale, and today they are unicorns. So there are so many things that affect funding, but it all comes back to the most important thing: structure. Structure goes beyond your incorporation. It goes to your internal processes. It goes to your compliance requirements. It goes to your corporate governance structure. It goes to your human resource policy. And it also goes to your sustainability plan. And no company is too young to have structure. I was very intrigued when the speaker, the lady, mentioned something, that there's so much commingling. There's this commingling of funding where you are unable to distinguish between income and revenue. And because oftentimes startups start really from one person just running his business and trying to now create a structure around it. So monies come to you, you use them to, help people with their needs, buy personal effects, do different things, because you believe that there's 10 million in the account and that 10 million is accessible to me. Fiscal indiscipline, one of the key things that are proof of the absence of a structure. And so it's important to, want to assess funding. But before you assess funding, you've got to look at yourself. You've got to ask yourself, do I have what it takes to get the right funding? Now, we hear a lot of people say, these people are closing $1 million in Series A funding. They are doing this, they are doing... A lot of those things are flying in the air. The truth is, many venture capitalists would not touch Nigerian startups because of fiscal indiscipline. And so let me break it down for you. One, you have startups who build phenomenal products and they look for people to invest in them. And people invest in them, they use those monies to do things that won't help the business grow, won't scale the business to where it can now sustainably yield a return on investment. And then when they now face challenges, they look for another person to buy out and pay the initial VC. There are things that happen and that we see. And it's all a failure of corporate governance. Because, for instance, have a startup, you must have a board. And a board doesn't just help give strategic direction for the organization. It also provides oversight, checks and balances, internal checks and balances. Because indiscipline is a very big problem. And that's because you have founders or you have entrepreneurs who are heavily invested in the businesses, heavily invested in the product, plowing all their resources to make this work. So when it starts yielding revenue, they see their sacrifice before they see the sustainability and growth of the company. They see all that they have put in. And they begin to see, oh, it's time to actually reap the benefits of what I have invested in. And where there are no structures in place, you really cannot limit their penchant for ensuring that, oh, their sweat is cleaned out. So there's so many things around it, but I'll take it all back to structure, having the right structure in place, having a corporate governance system in place, having adequate documentation, deciding what is the right structure for the business I intend to do, ensuring that intellectual property protection is tied in neatly. Very important. Very, very important. Whether it's trademark, whether it's patenting, whether it's copyright, it's important to ensure that these things are done. And then, even more importantly, having adequate NDAs in place. Now, what this does is that it puts the other party, because you see, many businesses pitch ideas, and you're pitching to this, you're pitching to A, B, C, D, you're trying to get people to understand your business and now see how they come in. And oftentimes, in passionately trying to do this, you let out a lot of your commercial and business secrets that end up giving you competition earlier than you should actually get. And sometimes this competition comes with the right funding, the right support, and they stifle and more or less destroy these companies even before they grow. So there's so many issues around it, but it all comes down to structure. Structure, structure, structure. There are three professionals that must work with you if you are a serious-minded entrepreneur. You must have a lawyer, you must have a financial analyst, and you must have a medical personnel. Because we're in Nigeria, and we all understand the pressure. And even anywhere in the world, entrepreneurship is not a tea party. It's a lot of work, and it drains those who are the forefront of it. And so you need to be healthy, because only people who are healthy can run successful businesses. But even more importantly, where you have adequate experts working with you, they'll advise you on the right structure. So getting legal advice or getting the legal retainers isn't about approaching a lawyer to say, I want to register a company. Please help me register a company. That's different. The conversation shouldn't be, I want to register a company. The conversation should be, I have this idea. This is what I want to do. What is the best fit for me? So until we have entrepreneurs and startups move from ticking the boxes, looking at legal structure as, just ticking the boxes. Okay, let's do this because we need this. So that we have a certificate to register, so that we have this. To now really seeing their peculiarities and the best fit structure for them. We'll continue to have issues where they will not get the right funding they need, because a lot of VCs are beginning to see that, look, it's beyond just investing now. We don't want to throw our monies out. What's the return on investment? How are we going to ensure that what we're giving these companies are yielding the relevant fruit and helping them scale and grow? Let me throw a challenge to the audience, and just an internal challenge. How many Nigerian-based startups that were very popular in the 2018, 2019, 2020 still remain very relevant in 2023? Do that mental homework. The popular ones that were all over the place, sponsoring events, doing so much, how many of them remain relevant today? How many of their products remain relevant? Now compare this with traditional semi-formal businesses that have scaled over time. Compare this to the traditional entrepreneur or business person in that shop in Lagos Island, in that shop in Alaba, that has been doing this thing for 20-something years, starting from a small cubicle to now owning the building, owning outlets, and scaling the business. you will find that the difference between these two is that one bootstrapped and marketed its product and pushed the product to build revenue. The other built a good product and looked for funding. Funding stifles growth when you get it too early. Secondly, funding that you do not know how to adequately manage will put you in trouble and kill the business. So these are a few thoughts, and I think we should see out there, and I'll take questions later.
Well, thank you very much for sharing that. When you mentioned, when you gave the assignment and to do the internal work to think about those startups that were reigning about 3-4 years ago, and then to benchmark it against right now, I could just think of some, and it's actually really important to know when to ask for funding, because and like I mentioned earlier, we don't all businesses don't necessarily need funding, right? But because of where we are and how important we think, or how glamorous actually we think that funding is, we think that once the product is in the market, the next thing is to scale, and we start looking for funding to do that without necessarily paying attention to ticking all of the boxes. And I mean, you talked about structure, and I'm going to come back to you on what structure should look like ideally. But before you do that, I thought to mention, you mentioned that there are three professionals that you must have: the lawyer, the financial analyst, and the medical personnel. And I laughed when you said medical personnel, but I really understood that it's important to have medical personnel, because like you pointed out, our environment is pretty volatile, and then it has a way of putting pressure on you as an entrepreneur. I mean, even without being an entrepreneur, there's pressure on a regular basis. Then add throw in the task of being an entrepreneur, and you're responsible for an entire business, you're responsible for people, and then I mean, you could just into depression and all of that. But I'm glad that you mentioned that, and I hope that people can pay attention to that, and of course, pay attention to their health, which is very important. I mean, it's okay to have funding, but if you don't have the health to know how to distribute the funding, then it was just a waste of funding, you know. One more professional that you should add to your list is the communications professional, and I'm saying that from my perspective as
Really?
a strategic communications professional. Yes, you
Really?
should have.
But
Yes.
in fact, this initial ballpark of 3 professionals, it's quite old, and I think I need to even amend it a bit more, because the truth is, no matter how good your business is, if it's not perceived outside as being good, if it's not seen, it will fail. So really, you need to know how to leverage on new tools, technology, and communicate the brand. And so, yes, I agree with you, and I will definitely modify this my short list. But it's also important to be very short.
Yes, I agree with you. So yes, thank you very much. And I hope that you have taken note of that, and you should add those to your startup pack before you even begin. But let me come back to you on structure. I mean, you've talked a lot about it, and I understand the importance of structure, and I'm sure that every other participant on this call understands the importance of structure. But what specifically does structure look like? What specifically is structure? I mean, we can just say structure, and that's it. But specifically, what do people need to put in place to ensure that they have the right structure before they now start to look for funding?
So here's the thing. Your structure, your corporate governance framework, or structure as we call it, can be broken into different segments. The first is the legal structure, right? What sort of legal entity do you have? Are you registered right? right? Your corporate affairs commission registration. If you have a brand, is that brand protected, right? Are you registered with the relevant regulatory bodies that, deal with the business you're in, right? So imagine you're running a school, and you're not registered in the Ministry of Education. You're running an illegal entity, even if you're registered at the Corporate Affairs Commission. And the Lagos State government or the Lagos Ministry of Education or whatever location where you are will come and shut down the school. So ensuring that you're registered with the relevant, statutory entities. And this is why an expert needs to advise you when you tell them what the business idea is, so that they do the adequate market research and let you know, okay, this is what you need, this is what the registration you need, this is where you need, this is what you need, and then they get it done, right? And then intellectual property protection, very, very important, because the truth is, if you don't protect your brand, people will steal it. And if they steal it, you really have nothing, and then also ensuring that your brand does not become generic, because one thing that many people like, they want their name to be out there. They want their brand to be out there. But the moment your brand becomes so out there that it becomes very generic, you cease to have intellectual property protection, brand protection, and then you start having issues. So, there are some brands, for instance, if I say detergent to you, a name comes to your head, right? If I say noodles, a name comes to your head. If I say seasoning, a name comes to your head. Those brand names, previously trademarked and protected, have become generic. So you must be able to balance. Both. So that's as far as structure is concerned. And then after, you see, registration is one thing, setup is one thing. Post-incorporation and post-registration formalities are also important, ensuring that you have the right timing for everything. You file your annual returns as at when due. You file all your relevant documentation. You make sure that you're doing what you need to do. For startups in Nigeria today, keep your ears down. As soon as the secretariat is set up for the Nigerian Startup Act, and you feel that your company comes within the purview of the definition of startups, you apply for what is called startup labeling. Because startup labeling will help startups scale, will help provide them with seed funding, help provide them with credit guarantee facilities for those that really need the facilities, right? There's also going to be the startup engagement portal, where startups can now go and get all the support they need from regulatory agencies in one place, as against going to pockets of places, right? So it's important to know all these things and prepare yourself. So that's as far as legal structure is concerned. And then you have your internal compliance system. Now, there are two forms of compliance. There's internal compliance and then there's external compliance. Internal compliance is internally in the company. What is your structure like? Do you have a human resource policy? Do you have a corporate governance document? Do you have a board? Do you have a system in place that checks excesses and prevents the company from imploding on itself? We've seen, for instance, in the media, a lot of issues. I'm sure you heard at the time, the horrible bosses issue that pervaded the whole of social media at the time, where a lot of startup owners were being called out for bad practices in the workplace, right? And this even led to some of them being removed, some stepping down, some having to resign and all that. Now, one thing would have checkmated that if there was a corporate governance system in place that was actually being implemented. So it's one thing to have all the good paperwork done. It's another thing to put pay to it by ensuring implementation. And so that's internal compliance. What are your internal compliance procedures? Your employee procedures, your engagement procedure, your onboarding procedure, and your offloading procedure. Do you hire and fire at will? Even as you choose to recruit, You know, one thing many startups and business owners don't even realize is that as you build your business and you seek to employ people, you know, certain people come into your businesses to steal your trade secrets and run away to go and implement them. You know, the CEO of Patricia, you know, was saying at the time that someone came, they employed him because he was very good. He stayed 6 months with them, learned everything they were doing, and went out to replicate the same thing and become a competitor. Now, if you don't have the right documentation in place, this will always be your story. But with the right documentation and structure in place, you're able to checkmate some of these things through NDAs, through trade secret agreements, through non-compete clauses and agreements, to non-solicitation agreements and clauses. These are important things that you must have as a startup. And you must have as a business generally to ensure that your internal compliance, you know, procedures are properly done. And then you have external compliance, ensuring that you file all your applications, you pay your tax returns, you do your PENCOM, whatever is required of the company, you continue to do. You ensure that your papers are in order. You know, things as basic as tax. People always, you know, confuse themselves with tax-related issues, and they see it as a very difficult thing. But really, tax is on profit, not on revenue. So it's on profits, not on everything that comes into your company. But many people do not realize. So if you don't make profit, you don't even have any tax to pay. And even when you make profit today, people forget that there's a Finance Act that has provided certain leeway and certain exemption for small companies. If your turnover is less than 25 million, you have no tax obligation apart from remitting VAT, which you collect on behalf of the federal government for services you have rendered. But you have no tax obligation. And if it's between 25 million to 100 million, your tax obligation is reduced to a very minute amount, right? And so except it's over 100 million, then you know you have certain tax obligations. You know, filing your VAT returns, you know, before the 21st of every month. Simple things that really we allow to stay on, and then they become, you know, a hydra-headed issue that we now start, you know, battling to tackle. You know, so those external compliance, you know, are the structure. And then your corporate governance policy, your vision, your mission, your plan, you know, how you intend to scale your short-term, mid-term, long-term goals. Having these documents in place and then ensuring that as you're growing and scaling, you're not watering down what brought you forward, you know, and then you're building adequately to grow. You know, so these are some of the things that it's not a conversation we can have in a 1 hour webinar, but it's something that we must keep at the forefront of our mind as we seek to grow. Corporate governance is very key to ensuring growth, you know, and that is, you know, the gamut of structure. When we say structure, what are the agreements in place, for instance, between, if there are co-founders, you know, 2 or more founders, do you have a founders agreement that spells out your obligations, your entitlements, when problem comes, how do you resolve those issues and problems? What are the, you know, pitfalls to you guys will try to avoid as you build your business? You know, a shareholder agreement or a founders agreement resolves these issues, because these are things that cause problems, and problems are the things that kill businesses. You know, so when you have a structure in place, you have documents that provide, you know, like a Bible arrangement, right? That gives you solutions to problems when they come and how you can surmount those problems.
Awesome. Brilliant. Thank you for sharing that with us. And I hope that, I mean, I have a little more clarity with regards VAT, which you said I collect on behalf of the government as a business owner. And I'm sure that a number of people don't also understand the details about stuff like that. And of course, some of these other things I have mentioned. And I hope that we can all live here after this call and make the necessary adjustments to our business models and operations. So thank you very much, Mr. Mr. Mori, for sharing your thoughts with us. I will come to you now, Mr. Ifeanyi. Are you here? Hello, Mr. Ifeanyi, are you here? Can you hear me? Okay,
Hello, yeah, I'm here. I'm here. Sorry, I was trying to
Okay.
unmute.
All right, no problem, sir. So while you were talking your presentation, you mentioned that businesses need to positively, and you also talked about your experience as and you have had to chase people to give them money. Of course, all want money chasing us, as a matter of fact. But my question to you now is, what were those things? I mean, how did those businesses position themselves so that you were able to see them to even start chasing them to give them money? So what were the things?
The money I've worked this for this so far.
I'm not sure if it's just me. Can you hear me, sir? Can you hear me, Mr. Ifeanyi? Sure. Please, can anyone else hear me?
Yes, we can.
Okay, so I guess
Yes, we
okay.
can.
All right.
We can hear you, Blessing.
All right, thank you. Well, before he comes back to join us on the call, Miss Bisola, can you hear me?
Yes, I can hear you.
Okay, so I wanted to ask you if you to talk through some of the trends that you think would be important in getting funding and financing generally in, say, the coming years, say next 2 years, next 3 years. What should people be on the lookout for?
From the aspect of the SMEs, is that the question?
Yeah, yes. You're muted, so I don't know if you're speaking. She left. I guess everybody's having a bad network day. Miss Atunde, can you hear me?
Don't worry, I don't have a bad network. I'm absolutely here. I'm here for you. Yes, I can hear you. Now you're the one who's muted. Or
Blessing, are you here?
Oh dear, yes, I am here. I'm sorry. I mistakenly got muted. I was saying that I've also had my share of bad network day.
okay.
Okay, so my question to you was for businesses and SMEs that are looking for funding, what are some of the common mistakes that you think they should avoid? I mean, as we wrap up this conversation, we've talked about, we've looked at it from the legal perspective. We've also had Mr. Ifeanyi take us through a mini masterclass on what to look out for and all of those. So from your perspective, what should we be looking out for if we want to raise funding?
Thank you very much. For SMEs, common mistakes that SMEs should avoid. I think some of them have been dealt with in this room. Primarily, ensure that you tell your story well. I think one of the biggest things I see a lot of SMEs not get right is the storytelling part. a poorly told story, regardless of the strength or the product or or the strength of the team behind it, is irrelevant. So storytelling is key. Now, some of that would require external help. So people should go get all the support they need in terms of their ability to tell their stories well. Secondly, is how you your numbers, your numbers in the business in terms of organizing your financials. And that can be either because you also didn't, your record keeping is poor or not done professionally. So ensure that you get help from experts in putting together your numbers. Some people think it's something that should be done when they become a big business. No, it's something you start from the beginning, from the very beginning. I know, for instance, that there used to be this software that I used to use back in the day for my numbers when I had this, there was years ago when I had a small business. That software was called Wave. I don't think Wave is still open to in the Nigerian geographical space, but I know that there are local equivalents of Wave. For instance, I know that Flutterwave had one. I can't remember what it looked like or what its name was called, but anything that helps you, with your record keeping, because it can be a big pitfall for you if you don't figure that out. Corporate governance is another thing, and basically, let me leave the big speak and just call it structure. There's a minimum level of structure required for a business, and I'm not saying go and hire a legal person, hire a head of marketing, have an internal control officer, and have all of that from day one. No, I'm saying at the very least, have people who may be wearing multiple hats, right? So for instance, you can have somebody who doubles as finance control, and still does some of your internal control work. Or somebody who does basically create checks and balances within the enterprise that allows you to have a well-run, structured business. Also, create that for yourself as well, and that's where having a board comes in. Where you think it may be too early for you to have a board, then I'll go back to what I said earlier about you not running alone. Not running alone allows you to have not only the benefit of other people's input, but also the benefit of other people's check on your own potential errors or excesses. Because what that does is, and don't forget that why all of this is important is, especially for somebody who wants to build a sustainable enterprise, is the fact that you know that some of those mistakes you would make may be irredeemable. So you want to ensure that from day one, you protect the business, even sometimes from yourself. And I think for most of us, if we get some of these things right, if we figure out how to keep our record, figure out how to tell our story well, figure out how to staff well, because of I figure out how to create checks and balances within the enterprise that protects the business. Sometimes from us, we will go far enough in our businesses. Thank you.
Thank you very much, Sir, for sharing those thoughts. And I really agree with you. Just like Mr. Murray mentioned previously, it's important to have the right communication. And I mean, storytelling is a brilliant communication tool. So yes, it's important to have the right communication so that you are perceived correctly. With regards record keeping, of course, work with a professional, or like you mentioned, use local options that are available. Personally, I use Zoho apps, Zoho books, and I mean it works for me, and I think that anybody else can use it, even if it's the free version, until you're able to afford a paid version, by all means. And of course, work with a legal professional so that your corporate governance is in check. then work with the right HR person so that you get the right staff, and avoid a situation where somebody takes your idea and goes to do a better job with it. Of course, you have to do that with putting the whole legal options in place. Thank you very much, Mr. Tunde. Do you want to say something else? Okay. Miss Bisola, are you back?
Yes, sincere apologies for that.
No worries at all. We understand.
Thank you. So
Okay.
can you take the question again?
Yes, please. So my question to you was, what trends do you anticipate with regards to financing that will be necessary for SMEs in the next couple of years, say the next 2 years, 3 years?
Okay, so my opinion about that is making reference to what the other speaker said about structure. Like putting in place the right structure is actually very important, and that's going to be a trend come in the following years. So another thing that is also going to be very important is every financial house or every financial entity wants to be sure that they can give their money or their credits to businesses that have the stipulated way and the clear process of how to repay their loans. So having a clear structure on how to repay loans is actually going to be something that's going to be in trend, because recent, most SMEs actually don't have clear path on how to repay loans. All they want is just to get this funding and put it into their business, even if they don't need them. But having a very clear path and a clear structure to how much you need, meaning how much loan or what's the value or volume of money you need to put in your business, and also having a clear path on how do I intend to repay these loans. These are very key things. Then also having a very tidy financial statement. Most of the retail, the small scale business I work with, they don't have a tidy financial statement, in the sense that we can actually use the financial statement to actually determine the value or worth of their businesses. In this sense, we can actually say if the business is actually healthy enough to get funding from any financial institution, or for us to even be able to determine how much we are willing to give those businesses. So one of the things that we would like in future would actually be playing a very important role is the tidiness of financial report and business statements, in terms of business statements and evidence of cash flow. Another thing is also the creditworthiness of such SMEs, including personally and on the business aspect, like how creditworthy are these businesses? How creditworthy is the personnel that runs these businesses? A lot of Nigerians actually don't know the importance of having a very good credit score, or have a very good creditworthiness. This actually have hindered a lot of businesses from actually getting the right funding they require, because they don't have the expected credit score or credit history that would actually put them forward or position them in a way that they can actually get funding. Thank you.
Thank you very much, Ms. Bisola, for sharing that with us. Let me ask you about creditworthiness. I mean, we're not a credit-based society, right? So when you're saying the business has to be creditworthy, the business owner, the founders have to also be creditworthy. What exactly are you talking about? And how can we be creditworthy so that we can prepare ourselves for funding when the opportunity comes?
Yeah, so in my own opinion, creditworthiness actually has to do with the character of the person taking the loan, or character of a person as regards loan repayments. How honestly have you been repaying your loans? How diligently have you been following up and meeting loan repayments commitments? And I know in the foreign world, one of the drivers of businesses there is actually credit, both businesses and personal life. But here in Nigeria is a little bit different, because our credit system is a little bit different and kind of complicated. But nonetheless, every average person or every average SME should actually have the character of credits, meaning the character to repay loans as at when due, the character to fulfill commitment as at when due. Of course, unforeseen circumstances happen and people or SMEs don't meet up to their commitments, but nonetheless, there's always a way to rebuild those the character in a way that shows how credit-worthy you are in terms of your character and your commitment, in terms of your character and attention to commitment, I would say. Thank you.
All right, thank you very much. So I think I'll just summarize what you said by saying that it's important to have integrity. It's important to pay back your loans when you take loans in this context, as it also helps with building your credit score. I mean, we don't have the credit cost system in Nigeria yet, but of course, as we go along and as we move forward, I'm certain that it will become a priority, and we should actually work to paying attention to that. Okay, thank you very much, Miss.
Thank you, Ma. Sorry, I went off and there was power cut. We're trying to change and all that. I'm sorry about that.
Okay, no problems. We understand. Okay, so I was asking you about positioning, and I said that you had mentioned that at some point you were chasing people to give them funds. And I mean, we all want money to follow us. We want money to chase us, as a matter of fact. Not, of course, that's not negatively or positively. So from your perspective and from your experience, how should businesses position themselves so that they can attract people like you chasing them for funding?
Okay, thank you very much. So when I referred to that, it was at a time when I was working in the bank, and I was in charge of vehicle and asset finance for the bank, and we had a budget, and the budget was to create assets of 1.5 billion on a monthly basis. And this meant that we needed to book facilities for customers who would buy those assets, who need those assets for their businesses. Of course, like I said, we had personal clients, we had SMEs, and we broke them into SME 1 and SME 2 based on thresholds, and then we had corporates. Now, for the SMEs, we built a book that over the years averaged about 30 billion naira. So that told you that we were pushing money out. And we were very heavy because it was vehicle and asset finance. What we were doing, we were buying vehicles, we were buying all kinds of assets, we were buying trucks and all of those things for customers. So we had to go out every day to look for clients to give the money to. Obviously, a lot of people wanted money. A lot of SMEs wanted money, but we only gave the monies to those who positioned themselves properly. So, for example, if I take haulage industry, there are a lot of people who have trucks. They walk around with trucks, and they come to you. They say they want to buy a new truck, but you look at the industry, you look at the business, and you say, how do I get my money back from this person? Now, we decided to focus more on those contractors, on those haulage companies that had contracts with multinationals. So what happened was that the multinationals would invite companies, sign them up, sign contracts up with them. So that was what our legal person here was talking about, legal structure. Sign contracts with them, 4-year contracts, 5-year contracts, agree payments to these companies per truck, per month. And then, so these SMEs were able to build their cash flows. We're able to project into what their revenues would be. And of course, by the time we do all the financial analysis, we could tell to an extent what their cash flow would be, what profitability would be. So based on those contracts, we were able to advance funds to a lot of them. And I know that in that haulage space, there was a time that we were close to 20 billion exposed. And we did a lot of that, but it was because these SMEs were tied to multinationals who would ordinarily pay on due dates and make those payments directly to the bank where the SMEs had accounts. So these SMEs, first of all, like our legal person has said, had structure in place because you can't even get the contracts with the multinationals if you don't meet certain requirements. So they had structure in place. Working with the multinationals and working with the bank meant that they would have structure. In trying to meet the requirements of the multinationals and those of the bank, you eventually have structure. And then once there is structure, the bank is comfortable and the bank begins to do business with you. Of course, we had a few that failed. We had a number of them that failed. And if we when we checked those who failed and those who performed, the story still was because those who failed were those that we said, let's try, because we were trying to expand business. Their structures were not solid. But those with solid structures stood the test of time. And till today, they are still there. So for me, what it means is that the SME should be able to understand its industry. So when I talked about haulage, some people come to me and say, I have a truck. Anytime somebody wants to hire a truck, I hire to the person, come and buy me a truck. And I say, sorry, I can't buy you a truck. You're hiring based on speculation. But when that person goes to a company and secures a contract, I will give him money the next day. So you must understand your industry and how your industry operates. What will make you look better in your industry? So that, because banks and financiers have different departments that look after different sectors in the country. In the bank, you have telecom departments. They are lending to telecom people. You have vehicle and asset finance people like us who are lending to people to buy cars and buy trucks and buy generators and buy all those kind of things. You have those who are looking after different sectors. When I was in the bank, my last bank, we had an SME team, a big team chasing SMEs. But the problem was that it wasn't that the money was not available. It was because a large number of them did not have structure, did not have governance. So till today, I will tell you that money is available out there for SMEs to attract. The first thing they need to understand is, am I seeking equity or am I seeking debt? If I am seeking equity, where should I go to? Not to the bank. Go to the venture capitalists. If you are looking for debt, depending on the kind of debt, there are some very small companies that the microfinance is would better deal their transactions than a Standard Chartered or a GTB. Also, for the bigger SMEs, a number of them go to the wrong financiers. So I will give you an example. If you have a business and you want to expand your business and you're looking for money to scale, and you want to buy vehicles, or you want to buy trucks, or you want to buy equipment and finance the equipment such that the equipment is the collateral, you don't need to bring any collateral. If you go to a bank like Guarantee Trust, for example, in Nigeria, you're wasting your time because they don't do it. You should be talking to the likes of Stanbic IBTC, Fidelity Bank, FCMB. So the SMEs need to also understand that when they bank with certain banks, you must bank with a bank that supports your type of business. There are some businesses some banks don't do. I would not be a trader. I import shoes and I sell and I go to open an account in Zenith Bank. Zenith Bank does not do my business. It is Fidelity Bank that does my business. It is Wema that does my business. So the SMEs too need to know this. And that is why I always say they should find ways to work with professionals. Like one of the speakers had said, have legal professionals, have HR professionals, have financial advisors who would help you. You don't necessarily have to pay all of these people, put them on payroll. No, some people can be on retainership, some people can be on transaction basis. Even at Lease House today, Asset Cap Lease House, where we are today, a number of my service providers are outside of my business. I don't have a head of legal in the company today because legal is outsourced. I don't have an internal company secretary because it is outsourced. I pay my legal per transaction. I pay my company secretary per transaction. I pay my IT people per transaction. My marketing and communication company, I pay them on a monthly basis to deliver certain things to me. They're not on payroll. I'm not paying taxes for them. I'm not paying them salary. I'm not paying HMO. quite a number of people like that. My finance director is not on my payroll, but he ensures that we get our financials every month. We have accountants in the office who report to the finance director. The finance director is on contract. He comes into the business once a week, oftentimes twice a month, to look at what all the accountants have done, correct them, and move on. And that way I reduce my cost, because the guy who does this for me is he has worked in banking, and right today he has his own firm, and he does it for a number of companies. So rather than have him on my payroll and pay him 1.5 million every month, I agree a fee that I pay him every month. And because he has 10 or 15 of us, he probably makes 5 million a month. So he likes it that way. When I was trying to recruit somebody for marketing and communication initially, the guy said, no, I will not come to you and earn 200,000 or 300,000 or 400,000. I have 10 of you. Pay me 100,000 naira a month and I will make 1 million. I will do all your ads from my house and I will post everything. So we need to begin, the SMEs need to begin to understand that. Do not be afraid when they tell you about structure or governance. You think I don't have the money. A lot of things can be outsourced. And today, there is a lot of outsourcing. Today, there's a lot of shared services. There's a lot of collaboration. I know somebody said something about collaboration, yes. And it was really key. When you are starting a business and you think you need all the money in this world, if it is money you are looking for, you may have money and maybe not even know what to do with it. Not to say that money is not very important. So, but one of the things that you could do is leverage on technical know-how and outsource so many other things. Today, at Asset Cap Investments, we provide financial services, and when we started, we got in capital because we needed to get in a minimum amount of capital, and then we started, but we created a platform called Lease House, which is a place where we display vehicles and other assets for financing. So you could go there, select whatever item you want, apply for financing, it will come into the office and an Access Cap will finance you. So Lease House actually is an online portal that we built, okay, for you to go select your cars, select whatever you want. You want to buy a laptop, go there, select it. You will see all kinds of installment plans. And if you apply, we will receive it in the office, we will deal. And then what happens is a lot of applications come from there. And we began to think at a time that, oh, we need to increase capital, we need to increase capital, we need to increase capital. And it's either you get more money from existing shareholders or you bring in other shareholders. And we got to the point where we're like, we want to bring in everybody into this company. And then what is left? And then, of course, like our legal person has said, you begin to have board issues. So you must be very careful too. So we thought, what do we do? And then we agreed that, okay, you know what? We would finance what we can do from equity. We will go out and create credit lines with other financial institutions and collaborate and work together to do deals. We would also have investments that people who invest in us strictly for transactions. So they are not on our board. We have transactions. We invest in the transactions. Transactions are done. We share profit. And so we began to be innovative rather than going to go and look for capital. Today, we have gotten to a point where no matter the application you bring, I'm not even worried, because if you bring an application, I ask my people how much is there. Okay, can that money do it? No, I know a million places where I can get the money to do it. So you begin to leverage off the funds of other people who are doing the same business with you. And initially, when we started this, people said, why are you talking to competitors? Why are you exposing yourself to competitors? I said, they are not competitors, they are collaborators. It is if you want to see them as competing. Even the collaborators themselves, it took time for me to convince them that we are not competing. We are both in this business. You want to sell your rice. I have brought 400 customers. Only me cannot sell this rice. Bring your own, let's sell your own. And at the end of the day, you find out that the pressure on you to increase capital drops, because at the end of the day, all you're looking for are margins. Whether you borrow the money, whether it is equity, whatever it is a margin you are looking for. So, yes, you need to be creative. You need to, first of all, have your know-how. And once you have your know-how and know how the business works. So for those of us in asset finance, I asked my people one day, I said, the vehicles I finance, do I own them? No, I go to Elizabeth, I go to Jermaine to buy it for the customer. That's fine. When I insure the vehicle, do I own an insurance company? No, I pay an insurance company. When I track the vehicle, I don't own the tracking company. I pay a tracking company. And I build all those things into the repayment, and the client pays me on a monthly basis. So I ask myself, who says I should own the money? Why don't you collaborate with one big person that has all the money that wants to do this, and then let's all have fun? So yes, the SMEs need to be able to show know-how, need to be able to position themselves properly. I have financed a company that was very small. We financed them, they became so big. And at the time, I looked at them and I'm like, I asked myself at the time, what am I still doing in this bank? I sit down here and I build people. But because it wasn't just because we were giving them financing. As we were financing them, we were ensuring they put appropriate structures in their organizations. We were ensuring they employed good accountants. We were ensuring they kept good records. So our offer letters insisted that every quarter you must send us this, every 6 months you must. So they had to do those things. And before they knew what happened, that governance got up to speed and all of that stuff. So yes, there is money chasing SMEs, but the SMEs need to be able to position themselves. And in doing that, work with proper consultants. Thank you.
Thank you very much, sir. So SMEs, you need to position yourself properly by having the right structure and every other thing that we've mentioned on this meeting today. And it's very important to work with the right consultants so that you have it all together. And like Mr. Ifeanyi has said, it's possible to travel light so that you're not bearing all of the costs that you can actually do without. And by doing that, you're able to by traveling light, you're able to outsource a lot of these things so that you're not having so much overhead cost. So I'm going to come to you, Mr. Tunde, for final thoughts, so that we can wrap up this conversation. We've been here for quite some time. Mr. Tunde, can you hear me?
Okay, I'm back. Final thoughts. So it's been a while. We've been here for a bit. This begins to look like we might as well turn this into a one-day conference at this point. So I think it's important that SMEs know, or proprietors of SMEs know, that they don't have. So yes, we spent a lot of time talking about the serious stuff or the business stuff, but there are some things that are useful to us that may not be in books or taught to us. Here's what I mean. You do not have all the answers, and that's okay. A lot of times you would have to wing it. That's okay. Many times you will fail at it. It's okay to fail as well, as long as they are not fatal errors, right? We'll get it. There'll be bad days, and those bad days, we shouldn't let them, suffocate our dreams. We should use the bad days to get our drive going on, to get our ginger in quote, right? So whatever it is that just know it will never be enough. But what will be important is get your community going. Find a group of persons or people who believe in your dream, who believe in you. Sometimes maybe it's not even your dream they believe in, maybe it's you. And find those people to, from time to time, get your energy back, get your juices flowing. Find that place that can get your juices flowing. Now, for some people, it's books. For some people, it's a short vacation. For some people, it's a group of people they can talk to. For some people, find that thing that can help you to get your energy level back up again. So sometimes you'll be shocking how much impact some of these soft things in quotes can impact on our productivity and our ability to fulfill our dreams. So final word to all of us out there trying to grow our businesses, trying to get things done, trying to add value to Nigeria, because that's what it is in essence. Zitra is here for you. Zitra is available to not only provide you with funding opportunities, but also with the advisory services you need. We are a SEC licensed platform. through our partner called Stronghold Investment. And we would eagerly listen to your problems and profile solutions that are adequate and what's the word? Specific to you. That was a Balablu moment. So that's it from me and Zitra Investments. Thank you.
All right, thank you very much, Mr. Tunde. And yes, you have heard it from all of the speakers on this call. I mean, we've been here for over 2 hours. That's such a long time. Mr. Mori, you want to give your final thoughts? I'm going to give you 30 seconds for that.
I've said it all, really.
Okay.
Structure, and reach out to us at Edugara and Company if you think you need any legal support with structure. We'll give some support at no cost and then charge you when need be. But ultimately, our focus is to ensure that startups don't just grow, but that they build phenomenal and enable and sustainable businesses over time. So I wish all the entrepreneurs here the very best, and I trust that they will grow sustainably. Thank you.
Sir, I heard at no cost. Should I come and see you?
Yes, we're all coming to you after this call.
Happy to receive you all.
Okay, yes. So you've heard it from Mr. Mori. Liz House, I'm sure that Liz House is also available to provide asset funding for you. I'm tempted to say at no cost, but I won't do that. Yes, so First Founders, Mr. Mason is no longer on the call. He had to jump off, but I know that First Founders is also available to give guidance to startups, and you should by all means reach out to First Founders. PayHippo as well. PayHippo, represented by Ms. Bisola, is also available to make loans available to you when you need them. And of course,
working capital.
Oh, sorry, working capital. My apologies. I'm learning these things. So yeah. So PayHippo is making working capital available, and you should take advantage of it. But of course, like we talked about on this call already, it's important to know when you need funding, and only ask for funding when you are certain that you need, and of course your structure is already put in place, so that you don't end up spending the funding on what's not necessary. And I work with PR Visions, a public relations agency, and you can reach out to us for your communication needs. Like we have also talked about, you need to be able to tell the right stories for your brand. You need to be able to position yourself correctly. And we all want funding, but of course, with right storytelling and with the right positioning, funding comes a lot easier for you. And that would be all from me. Thank you to all of the panelists for joining this conversation. Thank you for sharing your insights. We truly, truly appreciate your presence here. Thank you. I will now hand over the microphone to Esther. Esther, you have the floor.
Okay. Good afternoon once again, everyone. I just want to say thank you to the speakers, thank you to the moderators, and thank you to the attendee for taking time out to come on this panel. And so please, everyone, don't forget to subscribe to our Business Day online news. You can get the link on our website, on Instagram, businessday.ng, on LinkedIn, on Twitter. Or better still, you can also reach out to me and I'll get you registered for the Business Day subscription. You can also register for your workers, your staffs, and also your investors. It will really be nice for you all to register them to get news so that they don't have to get the e-paper. They don't have to get the paper. You just get the news on your phone in the morning and in the evening, so you know what is going on in the country. Thank you very much and have a nice weekend, everyone. Bye.
Thank you for having me. Bye.
Thank you. Bye-bye.
Bye.
Thank you for having us. Bye.
Bye. Thank you. Yeah.